You know what separates the men who make fortunes in this game from the ones who die broke? It's not intelligence. It's not even luck, though luck plays its part when you're positioned right. It's something far simpler and infinitely harder to master: the ability to sit still and do absolutely nothing when there's nothing to be done. I learned this lesson the hardest way possible, losing millions before I understood what the market was really trying to teach me. Let me tell you something about my early days. Back when I was just a kid chalking up prices in a bucket shop in Boston, I had a natural feel for numbers, could see patterns where other men saw chaos. By 15, I was making more money than grown men with families to feed. I thought I was a genius. I thought I had the game figured out. The bucket shop owners hated me so much they banned me from trading. Can you imagine? A teenager so good at reading the tape that professional gamblers refused to take his action. That should have taught me something right then. But pride is a terrible teacher. Here's what I didn't understand in those days. Being right about the direction of a stock means absolutely nothing if your timing is wrong. You can have the most brilliant analysis in the world. You can know with certainty that a stock is going to collapse or soar, and still lose everything if you move too early or too late. The market doesn't care about your opinions. It doesn't care about your analysis. The market is going to do what it's going to do, and your job, your only job, is to read what it's actually doing and position yourself accordingly. I remember one time, must have been around 1906, I was absolutely convinced that the market was headed for a crash. I could feel it in my bones. Every indicator I watched told me the same story. So what did I do? I started shorting too early, kept shorting as the market climbed higher and higher. I was right about the destination, but dead wrong about the journey. And in this game, being wrong about the journey will kill you just as dead as being wrong about the destination. I watched my account bleed out day after day, all while knowing with absolute certainty, that I was right about the ultimate direction. That's the torture of this business. You can be right and still lose. You can see the future clearly and still end up broke because you couldn't wait for the market to catch up to your vision. And here's the cruel joke. When the crash finally came, when I was finally vindicated, I had already been stopped out of most of my positions. I had been too early, which in trading is the exact same thing as being wrong. The lesson burned itself into my brain over years of painful experience. You must wait for the market to confirm your thesis before you commit serious capital. You must have the patience of a hunter waiting for the perfect shot. Most traders, and I mean the vast majority, they treat the market like a slot machine. They need action. They need to be doing something, anything, because sitting still feels like losing an opportunity. They see the tape moving and they need to have a position. They're gambling, not trading. I'll tell you what real trading looks like. Real trading is watching the market for days, sometimes weeks, sometimes months, waiting for your pitch. It's having the discipline to do nothing when the conditions aren't right, no matter how badly you want to be in the action. It's understanding that your capital is your ammunition, and you don't fire all your ammunition at shadows. You wait for the clear shot, the high probability setup, and then you strike with force. The market will always give you opportunities. Always. It's not going anywhere. The stocks will still be there tomorrow, next week, next year. But your capital, once you lose it, that's gone. Your mental capital, too. People don't talk enough about mental capital. Every loss, every mistake, it doesn't just drain your account. It drains your confidence, your judgment, your ability to think clearly. You can't trade well when you're emotional, when you're desperate, when you're trying to make back what you lost yesterday. I learned to keep what I call a trading diary, not just a record of my trades, though that's important, but a record of my thinking. Why did I enter this position? What did I expect to happen? What actually happened? Where was I right? Where was I wrong? This practice saved me more money than any single insight about market mechanics. It forced me to be honest with myself about my mistakes. And in this business, if you can't be brutally honest with yourself about your errors, you're finished. Here's something most traders never figure out. The stock doesn't know you own it. The stock doesn't care about your hopes, your dreams, your need to make back your losses, your desire to prove yourself right. The stock is going to do what it's going to do based on the forces of supply and demand, period. When you buy a stock, you're not entering into a relationship with it. You're making a cold, calculated bet based on probabilities and your reading of the market's intentions. And those intentions, you can only discern them by watching the action, not by reading newspapers, not by listening to tips, not by studying company fundamentals, though those have their place. You discern the market's intentions by watching what it actually does with cold, hard cash. Is money flowing in or flowing out? Are the strong hands accumulating or distributing? Is the stock showing strength or weakness relative to the broader market? These are the questions that matter. The patterns repeat themselves because human nature never changes. Fear and greed, hope and despair, these emotions drive the market just as surely today as they did when I was a boy chalking prices on a board. The names change, the technology changes, but the fundamental dynamics remain constant. This is why studying the tape, understanding price action, learning to read the language of the market, these skills never become obsolete. I went broke 3 times in my career. 3 times I built fortunes and watched them vanish. Each time taught me something vital, though I wish I could have learned those lessons more cheaply. The first time I went broke, I blamed bad luck and outside manipulation. The second time, I started to see that maybe the problem was me. The third time, I finally understood. I had violated my own rules. Every single disaster in my trading career came from the same source, from me abandoning the principles I knew to be true in favor of hope, impatience, or arrogance. You want to know the most expensive words in the English language for a trader? This time is different. I've lost more money on those 4 words than any other mistake. This time is different. This time the stock will come back. This time I don't need to use a stop loss. This time I can average down and make it all back. This time the market is wrong and I'm right, so I'll just hold on until it realizes its mistake. Every time I told myself those words, I was setting myself up for destruction. The market is never wrong. Let me say that again because it's crucial. The market is never wrong. You might be early in your analysis. The market might eventually prove you correct. But in the moment, the market is telling you the truth. When a stock is going down and you think it should be going up, the market is right and you are wrong. Accept it. Act on it. Don't fight it. The traders who survive long enough to get rich are the ones who respect the market's verdict even when it contradicts their own judgment. I developed a system over the years, a way of reading the market that kept me on the right side most of the time. I looked for what I called pivotal points, moments where a stock broke through resistance or support in a way that suggested real conviction behind the move. I didn't try to pick bottoms or call tops. I waited for the move to establish itself, and then I joined it with force. Let me explain what I mean by force, because this is another area where most traders fail. When you've done your homework, when you've waited for the right setup, when the market is confirming your analysis, that's when you need to bet big. Not recklessly big, but meaningfully big. The few times in your life when all the conditions align perfectly, when you can see the market's hand clearly, those are the moments that make or break your career. Most traders, they bet the same amount on every trade. They risk 1% on a mediocre setup and 1% on a perfect setup. That's insane. It's like going to war and using the same amount of ammunition whether you're shooting at shadows or at an exposed enemy battalion. I sized my positions based on my conviction and the strength of the setup. When everything lined up perfectly, when I could see as clearly as reading a book what the market intended to do, I would load up. I'd use every bit of buying power I had, sometimes more. And when things were murky, when I wasn't sure, I'd either stay out entirely or put on a small exploratory position just to keep my hand in the game. This approach, betting big when the odds were overwhelmingly in my favor and staying small or out when they weren't. This is how you compound wealth in the market. But here's the thing they don't tell you. You need capital to make capital. You can have all the skill in the world. You can read the market like I could read it. And if you're trading with a tiny account, You're never going to make life-changing money. Oh, you might double or triple your money, but if you're starting with $1,000, even tripling it doesn't change your life. This is why preservation of capital is so critical. You need to stay in the game long enough to build up a meaningful stake, and then you need to be ready when the big opportunity arrives. The big opportunity doesn't come every day. It doesn't come every month. Sometimes it doesn't come for years. But when it comes, when you see that once-in-a-cycle setup developing, that's when you need to be ready with both capital and courage. In 1929, I saw the crash coming. I shorted the market massively, and I made $100 million. $100 million in 1929. Do you understand what that means? That one trade, that one perfect read of the market at a pivotal moment, that's what people remember about me. But they don't remember the years of preparation, the losses, the learning, the discipline it took to be ready for that moment. And you know what's tragic? I lost most of that fortune too, in the years that followed, not because I forgot how to trade, but because I violated my own rules. I got involved in business ventures I didn't understand. I let other people influence my decisions. I traded when I should have been sitting still. The skills that build wealth and the skills that preserve wealth, they're not entirely the same. Building wealth requires aggression, the willingness to bet big when the moment is right. Preserving wealth requires defense, patience, the wisdom to recognize when there's nothing to do. Let me tell you about losses, because this is where most traders destroy themselves. A loss is information. It's the market telling you that you were wrong about something. Maybe you were wrong about the direction. Maybe you were wrong about the timing. Maybe you were wrong about the magnitude of the move. But the market is giving you data, and your job is to accept that data and adjust. Instead, what do most traders do? They hold on to losers, hoping they'll come back. They average down, throwing good money after bad. They turn a trading loss into an investment, and they do it not because they've reassessed their thesis and decided the stock is actually attractive at these lower prices, but because they can't bear to admit they were wrong. I made it a rule. When a stock didn't act the way I expected it to act, I got out. I didn't wait for it to hit my stop loss necessarily, though I always had stops. If a stock acted wrong, showed weakness when it should have shown strength, violated its pattern, I exited. Better to be out of a stock wishing I was in than in a stock wishing I was out. Your capital is your lifeblood as a trader. Protect it like you'd protect your actual life, because in this business, it is your life. Now let me talk about something that nobody wants to hear but everyone needs to understand. The role of luck and timing in this game. I was lucky to be born with a natural aptitude for numbers and patterns. I was lucky to start in the bucket shops where I could make hundreds of trades and learn from each one without risking serious capital. I was lucky to be operating during some of the most volatile periods in market history, periods that offered enormous opportunities for someone who could read the tape. But luck alone explains nothing. Plenty of people had similar advantages and died broke. Plenty of people had better educations, better connections, more starting capital, and they still failed. The difference is what you do with your luck. Do you recognize when fortune has smiled on you and press your advantage? Or do you squander your good fortune through carelessness, arrogance, or stupidity? Every winning trade is an opportunity to compound your advantage. Every loss is a lesson if you're willing to learn it. The traders who last, who build enduring success, they're the ones who maximize their wins and minimize their losses. It sounds simple, and in concept it is simple, but in execution it's the hardest thing in the world. You're sitting there with a winning position, and every instinct in your body is telling you to take the profit. You're up 50%, 100%, and you're afraid it'll evaporate if you don't cash out right now. But the stock is still strong, still making new highs, still showing every sign that it wants to go higher. This is when you need to override your fear and let your winner run. Add to your position if the setup remains strong. Ride it until the market tells you the move is over, not until your emotions tell you to be satisfied with what you've made. Conversely, when you have a losing position, every instinct tells you to hold on. You've already lost money, so what's the harm in waiting to see if it comes back? Maybe it'll bounce tomorrow. Maybe you just need to give it time. These thoughts are poison. A losing position is consuming your capital and, more importantly, your mental energy. Every moment you spend hoping a loser will come back is a moment you could spend finding a winner. Cut your losses quickly and without emotion. The market doesn't care about your cost basis. The only question that matters is, would you buy this stock right now at the current price knowing what you know? If the answer is no, then why are you holding it? I'm telling you this not as theory, but as hard-won wisdom purchased with millions of dollars in losses. The market taught me these lessons by taking my money every single time I violated them. And here's what you need to understand. The market will teach you the same way. You can read all the books you want, listen to all the advice, watch all the videos, but until you've lost real money on your mistakes, until you've felt the sick feeling in your stomach as a position goes against you, until you've experienced the euphoria of a big win and the temptation to overtrade that comes with it, you haven't really learned. This is why I say most traders need to pay tuition to the market. You're going to lose money as you learn. Accept it. Budget for it. Think of your early losses as education expenses, because that's exactly what they are. The key is to keep your losses small enough that you survive long enough to learn the lessons. Don't blow up your account on one stupid trade. Don't risk everything on a tip or a hunch. Use proper position sizing. Use stop losses. Preserve your capital so you're still in the game when you finally figure out how it works. And when you do start to figure it out, when you start to see the patterns, when you develop a feel for the market's rhythm, that's when the real challenge begins. Because success brings its own dangers. You start to feel invincible. You start to think you've mastered the market. You take bigger risks, cut corners on your process, ignore warning signs. This is how winning traders turn into losing traders. The market will humble you the moment you think you've conquered it. I learned to respect the market the way you'd respect the ocean. You can learn to swim, you can learn to surf, you can learn to read the waves and currents, but you never conquer the ocean. The ocean tolerates your presence, and if you respect it, you can enjoy its bounty. But the moment you get careless, the moment you think you're the master, the ocean will remind you who's really in charge. The market is the same way. So what am I telling you to do? I'm telling you to approach this business with the seriousness it deserves. This isn't a hobby. This isn't gambling. This is a profession that requires study, discipline, patience, and emotional control. You need to develop a method, a systematic way of identifying opportunities and managing risk. You need to keep records of your trades so you can analyze your mistakes and improve. You need to accept that losses are part of the game and learn from them instead of being destroyed by them. Most importantly, you need to be honest with yourself. When you lose, don't blame the market, the other traders, bad luck, or manipulation. Look in the mirror and ask yourself what you could have done differently. When you win, don't assume it was all skill. Ask yourself what role luck played and whether you can repeat the process. This kind of brutal self-honesty is rare, but it's absolutely essential if you want to succeed. The market is still there, still offering opportunities to anyone with the skill and discipline to seize them. The principles I learned 100 years ago still work today because human nature hasn't changed. Fear and greed still drive prices. Patterns still repeat. The strong still take money from the weak. Your job is to position yourself among the strong, to be the one taking money rather than the one giving it away. I'm giving you this wisdom freely, wisdom that cost me fortunes to acquire. Don't waste it. Don't waste another year making the same mistakes that destroyed countless traders before you. Study the market, develop your method, control your emotions, and above all, preserve your capital. The big opportunity is coming. It always does. Be ready when it arrives. Have the capital, the courage, and the clarity to strike when the moment is perfect. That's how you build wealth in this business. That's how you join the ranks of those who actually make it, instead of ending up as another cautionary tale. Now I want to hear from you. Drop a comment below and tell me what's been your biggest challenge in trading. What lessons have you learned the hard way? And if this resonated with you, If you found value in what I've shared, go watch the other videos on this channel. There's more wisdom waiting for you, more insights that could change the trajectory of your trading career. Don't waste another year. Start applying these principles today, right now, with your very next trade. The market is waiting, and your fortune is there for the taking if you're disciplined enough, patient enough, and wise enough to claim it.